Hello, it is the 24th of June 2011. Welcome to the Silver Log. It is now running a little past 1 o'clock New York time or 10 o'clock California time. I want to start this off with an email that I received, and I don't know exactly why I'm showing it, but I want to clarify it. There's a little bit of swearing, just one word, so if you don't want to see it, fast forward. I'm going to try to make this a minute, but just fast forward to where you see the charts if you don't want to see it. Alrighty, the question or the comment was the first one. The second one is down below in here. OI Crackpot, thanks for your shit analysis of silver trade. You've been wrong quite a few times as I have been watching your clips for 6 months now. You are way too bullish. You definitely have a blind love for silver. I will continue to watch your clips, though, as I love a laugh. About a day and a half, 2 days later. Oh, and I was drunk when I wrote that comment, so sorry, Derek, if I insulted you for calling you a crackpot. It's just what people call me for investing in this schizophrenic metal. Now, I've already mentioned that the metal is schizophrenic, at least based on its price movement. No, I said it was bipolar. It's the same sort of deal, I guess. But now let's go through what you say. Shit analysis of silver trade. Now, that's your opinion. That is your opinion. Now, what's really not an opinion is you've been wrong for whatever. Let's just say you've been wrong for 6 months now. And I've said this before just once, so I'll say it a second time, which is the reason why I'm doing this, because I want to get this through again. I don't care at all if I am wrong or correct with my predictions. What I am care about is if the data is correct. So if I'm wrong with my data, then I'm wrong. I care that my analysis is correct. That seems to have been very much the case. This channel isn't for the day traders, although if it's helping you out, congratulations. I don't care if people win or if people lose playing this game. I'm bringing out the data and I'm showing the methodology that I use. Secondly, this was I already talked about this. So now let's move on to the charts. When the market was moving higher, upwards towards in here, I think it was April the 20th, I think. The market was showing signs that it was going to be going through a roller coaster. So I guess I was wrong in stating that this was a roller coaster, I guess. I don't know. I also talked about the big level of 50 as resistance and how big that 685, it's not even, how big that Fibonacci upside target happens to be. Once again, I guess I've been wrong on quite a few occasions. Now, I don't care. I really don't care, but it's my methodology, and I want to go back and see how good or bad that I've been doing because I want to see if my methodology is correct. After all, I stated on the way down at 39 how big this significant level was. I stated that there was many different reasons for this Fibonacci to be big because there was 4 different levels that in and around 39 it all matched out. Maybe one of them was 3905, 3902. I posted it on my blog. But I also stated that if this is not support, that it's going to really go down pretty fast, which is exactly what happened. And I said that, and I'll continue to say that for reasons because of Fibonacci analysis. When you're at an area where you're supposed to find a bottom or a top, or the mathematics state that within Fibonacci there's a high probability, that doesn't mean it will. Rather, it means that if it doesn't, it most likely has a good chance of showing what we've seen in here. And notice how big 39 happened to be. That turned out to be resistance rather than support. So Fibonacci, again, like it usually is, was a major success. That's pretty much all I need to say about that. And then again, as far as these movements, I'm trying to emphasize the best that I can that this is a very volatile market. And the movements going from here to here on the long-term time frame is nothing more than a small pullback. And I really have to state long-term time frames. We'll get into the monthly chart at the end. We're only going to do 3 charts. This is the daily, then we'll do the weekly, and then the monthly. It says on here June 26th on the bottom right-hand side. That's a typo. That's a typo. It's actually 24th, but it was 1300 after when it closed, and it's about 3460 something right now, as of about 120 something in the afternoon. When this market came down, it came up towards this average in here, didn't find resistance, got above it, came back up to this Fibonacci for the second time, and then came back in here, finding support, average is flat, and then it's neutral. This is nothing more than a neutral market. It's not bearish. Is it showing signs that it might want to go bearish? Yes, but that's all that is signs. After all, we'll take a look at 2 days now. This day and this day. Since these 2 days existed, from the price going from 39 down to 32, that's a difference of about 20% movement within 2 days. We have yet to have either broken out this high or broken down below this low, showing neutrality. Very simple. You break to this upside, then you can be optimistic. You break it to the downside, then you can be pessimistic within price movements. And if you stay within that range, you can stay neutral or just continue shaking your head, whatever it is you want to do. The bands, which are like Bollinger Bands, but not quite. They're very similar, and they are calculated to do the similar sort of things, which is to gauge overbought and oversold market conditions. Within the Bollinger Bands, what you'll notice is that they'll really crunch in really fast. These ones won't, but they will do the same thing as far as closing in on each other. As you can see, this was going down and this was going higher. The way this is calculated is it takes the volatility within the last 18 periods, and then it takes that volatility percent, it triples it, and then it takes that movement from either the high and from both the high and the low, and that's how the bands have been calculated. What I like better about these than the ones that regular Bollinger Bands is the Bollinger Bands are really tightened within the range. And that's fine and dandy to help you show the range, but a regular box can do the same thing too as well. But on a breakout either towards the upside or downside, it can give you a level where it may potentially find that little bounce. But again, for now, very neutral market. As far as the monthly chart, which I really wanted to show second, so let me just get to the weekly chart first. Or monthly chart I wanted to show third, sorry. As far as the weekly chart is concerned, I've been stating that this to be cautiously bullish, and I needed this week to close in or around $38 an ounce for it to stay cautiously bullish. That did not happen. Rather, it continued to go lower, the 4th straight down week for silver, the 7th week down out of 8. But this was the biggest up week. It's still, like I say, within this range, but again, it's showing that it wants to potentially break down. The bigger level again will be this previous support and this 38.2% Fibonacci from the August breakout and the highs from this area. It's actually not the August breakout, but close enough. It's about somewhere down in here as the low. Either way, the numbers are around the same, and it did find support. The Fibonacci is calculated exponential. So if you're using a Fibonacci calculator on your program, or if you're doing the linear calculation of taking the price difference and then doing the old 61.8%, then you'll notice that the Fibonacci is somewhere up here. But exponential worked out fine. When it comes down to this level, if it comes down to this level, this will probably be an area where you'd find some support. Keyword is probably, second keyword is some. Because it's very bearish still to find support and go higher, or it's possibly bearish. Because the one thing that I'd be looking out for is a move down towards this 32 and change level that brings us back up to this former level of support, roughly at around $34 per ounce and change, 34.5. If it comes down here and back up to 34, then back down to this support line, I wouldn't like the chances of it holding at that point and then finding some new level of support below this line. Where this will come is very difficult to state. It could be this Fibonacci level. Maybe it's this band. 200-day moving average, not really, because the 200-day moving average is rising close to around 31 now, so it's pretty much at that line. And then you also got this previous resistance level here, roughly at about $30 and a quarter. That's the previous resistance from the 2010 highs. Now we'll move on to the monthly chart, but this is not bullish, it's not bearish, it's neutral on this time frame. As far as the monthly chart is concerned, still bullish, and it can still go down a little while more before it even goes neutral or cautiously bullish, because I need to see it go below or at least touch this line for me to take out any regular bullishness along the way. What this does present to you are lower prices. Now, everyone has different methodologies for when they want to get into positions. Do you want to do it on weakness? If that's the case, you've had one small level thus far. Maybe you find it when it comes to this level, maybe you go long. And again, if we break this level, you want to find a support level. Right now, this 18-period average of closes is at, of highs is at 27.58. So maybe we come down to the high 27s to 28. If, of course, it breaks below that support level. But if you're looking to buy on weakness, it comes down to this number. Maybe it works, maybe it doesn't. But when you know oftentimes it finds support, then oftentimes it's going to proceed higher after that situation. And if you're looking for moves on strength, well, once you see it starting to go higher, then look at the shorter term time frames, the weekly and the daily, and when you find a buy opportunity, then there you go. You'll have your buy opportunity. But this play is not being so bullish on silver, although I am bullish for different reasons, like my I don't say strategy, but that's a terrible word. Prediction or confidence analysis that solar panels are going to be like the next big thing, at least one of the next big things coming. That's a reason why I'm bullish, but that shouldn't be your reason. And if it is, well, then that's fine. We came to the same conclusions, but it's being extremely bearish against fiat dollars. It's being very knowledgeable that fiat currency that has been created is a debt-based system, and people are waking up to this information. We've had fiat money for decades, and people didn't even know what fiat was. If you go into a store today, say you go into dozens and dozens of stores, and you say to the clerk, do you accept fiat? That's all you need to say. Do you accept fiat? What you will get today is a bunch of no's. What's fiat? And then some people will know what fiat is and then instantly know that you're awake because you said the word fiat, because they are awake, and they will say something like yes, and well, we accept that, but we're not taking gold, or some sort of remark because they know what fiat is. Out of 100 people, some would know, some would not. But if you take that 100 people 5 years ago, no, let's take 10,000 clerks at different stores 5 years ago. You might be lucky if one or two of them would even know what fiat is. More people are aware because the information is available and ready for them whenever it is that they are ready to wake up. If you know people who need to wake up, let them know. Give them a little bit of information to help them along the way, the best that you possibly can. Thank you for watching, and have yourself a magnificent day.